Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is bouncing from critical support, while the new inflation numbers today could change everything. So I'll be talking about that in just a moment, alongside Ethereum, which is now trading between support and resistance, which I'll talk about later in the video, so definitely watch to the end. First of all, we need to talk about the new US CPI inflation numbers that are being released today. In fact, by the time you're watching this video, the new numbers might already be out. And so if that's the case, as always, I'll be sharing the new numbers as soon as they get released over on my Twitter. So if you want real-time updates, check my Twitter account, link down below in the description and in the pinned comment. But taking a look at the expectations for today's CPI inflation numbers, right now, the majority in the market is expecting 3.1% year-over-year inflation, and the trading economics forecast is also expecting 3.1% year-over-year inflation. And so basically, this is what the market has already priced in. Once again, these expectations, 3.1% year-over-year inflation, has already been priced into the market, which basically means if we do end up seeing that result, if we end up seeing 3.1% year-over-year inflation in the CPI with today's new numbers, then that should be relatively neutral for the market. But if we see anything other than 3.1%, that is where we could see a little bit more volatility. And basically, the further away from those expectations we get, then the more volatility we will likely see in the markets. So, for example, if we only got 0.1% away from those expectations, so for example, 3% or 3.2%, that's really not that big of a deal. But for example, if we got something like 2.5% or 4%, obviously that would be a big deal, resulting likely in a large volatile move in the markets. And basically, all you need to know is the lower the number is, if it comes in underneath expectations, that should be bullish for markets, but if it comes in above expectations, that should be bearish for markets. So once again, if we get that number and it's 3.1% year-over-year inflation, that's relatively neutral. If it's below 3.1%, that should be considered bullish, but if it's above 3.1%, that should be considered bearish. And once again, the further away from expectations, the more volatile that should be. So if it's well below 3.1%, that should be very bullish, but if it's well above 3.1%, then that should be very bearish for the market in the short term. And the reason why this would be bullish or bearish for the market is really all to do with the Federal Reserve raising or lowering interest rates. And in fact, the next FOMC meeting, also known as a Fed meeting, is happening tomorrow. And right now, the majority in the market is expecting for the Fed to keep interest rates the same. Because as of right now, on the high end, if you're looking at the federal funds rate target range on the high end, once again, we're at 550 basis points, which is 5.5%. And right now, around 98 to 99% of the market is pricing in and expecting for that to stay the same, with around 1 to 2% of the market expecting for a 25 basis point hike, which means raising interest rates by 0.25%. And one of the main factors that can influence these probabilities and influence the Federal Reserve's thinking and decision on interest rates is, of course, the inflation rates. So once again, if inflation comes in well below expectations, then that could mean rate cuts sooner than the market might have thought, which is a bullish signal. But once again, if inflation kicks back up again and comes in above expectations, if it becomes more of an issue, then that means we could have a slightly higher chance of a rate hike, or at least higher for longer in terms of interest rates. And once again, higher interest rates is bearish for the economy because it increases the cost of capital, which slows down lending and slows down the economy. And in case you're wondering what all of this means for crypto, I'll talk about that in just a moment. But first, looking at the next Federal Reserve meetings after tomorrow's Fed meeting. The one after tomorrow is happening at the end of January next year, and right now the market is also expecting for the Fed to keep rates where they are right now at that Fed meeting, and the market is also expecting for the Federal Reserve to keep rates where they currently are right now at the Fed meeting after that, so in the March Fed meeting next year. But potentially in around May or June next year, in one of those Fed meetings, we could end up seeing the first interest rate cut based on what the majority in the market is currently pricing in. And once again, reducing interest rates, cutting interest rates back to the downside, that is bullish for the economy, bullish for the markets, because that increases lending activity, which basically increases the circulating supply of currency in the economy, which is bullish for especially scarce assets like Bitcoin. Because obviously, as more and more dollars are created, that means there's more dollars out there to buy the limited amount of Bitcoin that's always going to be limited. And so with that supply and demand imbalance, the only way that corrects is through the price equilibrium, with the price going to the upside. upside. And so once again, when we're talking about interest rate cuts, think about reducing interest rates, which increases the amount of lending happening. And because the banking system is a fractional reserve banking system, when banks lend money, that increases the supply of money, which is essentially money printing. And once again, when a lot of new currency is printed, that usually increases the value of assets all round, and especially scarce assets like Bitcoin, exactly like what we saw in late 2020 when a lot of money was printed back then. And so once again, the futures market is expecting a lot of rate cuts happening next year during 2024, starting roughly around the middle of next year. And once again, that's a major bullish catalyst. That is a major bullish signal, exactly like what we saw at the beginning of the previous Bitcoin bull market back in 2020. And of course, what we also saw back in 2020 was the previous Bitcoin halving, the third Bitcoin halving. And next year, we have the fourth Bitcoin halving. And so we have multiple fundamental and macro factors all lining up together again for another major bull market. Once again, interest rate cuts lined up with the halving and also lined up with spot Bitcoin ETFs all kicking off within the next few months. And so essentially with any short-term dip that we see, personally, I will be taking that as a major buying opportunity and holding that Bitcoin for at least the next 1 to 2 years with potentially a major bull market on the horizon. But anyway, getting into the Bitcoin chart, this right here is on the weekly time frame, and over the last one day, nothing much has changed on this chart. So if you're new to the channel and you want to know more about this weekly Bitcoin chart, then check out my last video here on the channel. So getting straight into the daily Bitcoin chart, and of course we still have this active bearish divergence right now here on the daily time frame with higher highs confirmed in the price and lower highs now confirmed in the RSI. And so once again, as I explained in my last video, this means it's very likely that within the next few weeks or so, we're going to see reduced bullish momentum, which means either a sideways consolidation or potentially a bit more of a pullback within the next couple of weeks. And now this does not necessarily mean the bullish trend is completely over. Of course, we could see a pullback or consolidation within the next few weeks before continuing the bullish trend later on. That's always a possibility. But once again, I would not necessarily expect a lot of bullish price action or bullish momentum, at least anytime soon in the immediate short term. And so essentially, this could potentially result in the last final great buying opportunity for Bitcoin before the rest of the major Bitcoin bull market and the halving and the ETFs and all of that starts kicking off. And so basically, personally, I would not be wasting this opportunity if we do end up seeing a bit more of a dip. Once again, I'll be using that to accumulate Bitcoin. Of course, not financial advice. I'm just letting you know what I am doing. And staying on the daily time frame, taking a look at the DXY or US dollar index, and another reason why interest rates can be important for Bitcoin, at least in the somewhat short term, is of course if inflation comes in above or below expectations, once again, that can influence future probabilities for interest rates. And basically, if interest rates in the US go up or down based on the Fed funds rate, that can influence the value of the US dollar relative to other currencies. And so basically, if the Fed funds rate, if interest rates inside of the US are very high, that can of course increase the US dollar's value, which would increase this DXY, which would be a bearish signal for Bitcoin, as we've seen a few times this year. But on the other hand, if inflation comes in below expectations and we see interest rate cuts happen sooner than previously anticipated, that could result in the US dollar actually losing value relative to other currencies. And once again, when the US dollar index or DXY is bearish, of course, that is a bullish signal for Bitcoin and crypto. And so once again, that is why I cover interest rates and inflation rates here on the channel, even though it's a crypto channel. Of course, I cover those because it can influence the DXY, which is a very good indicator for Bitcoin and crypto in terms of the short-term bullish and bearish trends. But anyway, zooming further into the short term, looking at the 6-hour Bitcoin chart, and right now the price of Bitcoin is finding a bit of resistance at around 41.8k to 42k now that we have broken below that level. And as for resistance further to the upside, we should have some more resistance at around 43,000. And of course, this resistance up here that I've been talking about on the channel since all the way back here, which is sitting at around 44.2k to 44.3k. And as for short-term support, we do have this Fibonacci level right here sitting at around 39,500. We also have a lot more support at around 37 to 38,000. But if you're taking a look at this 8-hour Bitcoin chart, we can see this ascending line of resistance for this previous ascending parallel channel now acting as new support, and that is sitting at pretty much exactly $40,000, now coming into play at just above 40,000, closer towards around 40.2k. And so once again, that is now acting as short-term support. But if we see a confirmed break back below 40,000, then once again, we will likely see a drop back down towards around 39,500. And if that level does not hold, then we will likely see a return to 30,000 38,000, but around 38k, we have a lot of support. And taking another look at that 8-hour Bitcoin chart, we also have this ascending line of support back here from, once again, this previous ascending parallel channel. And that line of support is also sitting at around 37,500. And if you're zooming further into the short term, looking at the 4-hour Bitcoin chart, once again, we still have this small bearish divergence currently playing out, as I warned about all the way back up here. Once again, back then, I did say that it's very likely we could see a short-term pullback like what we saw back here, because history is repeating. We're simply repeating another bearish divergence in the short term like what we saw back here. And technically speaking, this bearish divergence has not yet been invalidated, but even if we do invalidate this bearish divergence by seeing more of a bullish trend in the RSI in the short term, of course, that could result in a bit of a bullish relief in the short term, but remember, we still have that bearish divergence here on the daily time frame, which is now active. But believe it or not, you can make money in crypto even if the price is dumping, with long positions and short positions. Of course, long positions if we're going up and short positions if we're going down. And if you're wondering where you can trade crypto like that to make money if we're going up or going down, then make sure to check out Bybit in the link down below this video if you want to claim $30,000 in bonuses. Because without that link, it's only a few $100s in bonuses, so you might as well use that link down below this video if you want to get ready for the next trade over on Bybit. But if you cannot access Bybit for whatever reason, or if you can't KYC, then make sure to check out Bitflex, which is just like Bybit, but you don't need KYC with Bitflex. And so I'll also make sure to leave a link to Bitflex in the description down below and in the pinned comment. And if you use that link and deposit $100 worth of crypto and make one trade over on Bitflex, you can claim 10 USDT for free. And so if you're trading crypto anyway, or if you're preparing to take the next trade, then make sure to check out those links down below this video to get those extra bonuses. But anyway, taking a quick look at the Bitcoin liquidation heat map, just in the imminent short term, we do have some liquidation levels just above the current price. In fact, this area of liquidity is starting at around 42.2k, going up towards around 42.4k, which is where we have a lot of liquidity, once again at around 42.4k. And so what this tells us is we could end up seeing a slight bounce back up towards that level right there to liquidate those positions before potentially dropping back down again, at least in the short term. Because obviously, like I said in my last video, we were due to see a double dip to the downside in the price of Bitcoin, which is exactly what we saw over the last one day as expected, thanks to the liquidation heat map. But anyway, getting into the Ethereum part of this video, this is on the weekly time frame, and just like Bitcoin on the weekly chart, nothing much has changed here for the price of ETH over the last one day on this chart. And so if you're new to the channel, then check out my last video here on the channel if you want to know more about this chart right here. So getting straight into the daily time frame, and once again, like Bitcoin on the daily time frame, we also have a bearish divergence now active, meaning we should not really be expecting a lot of bullish price action or momentum, at least in the short term. And so once again, at least for the next 1 to 2 weeks or so, we should be expecting either some choppy sideways price action, if not a bit more of a pullback in the price, once again, potentially over the next few weeks. And as for support on the daily time frame, we still have this major area of support, which was previous resistance, once again, now acting as new support, sitting in between around 2100, going up towards around 2150. And as for some other levels of support, looking at the Fibonacci retracement tool from swing low to swing high here on the 8-hour time frame, we have the 23.6% Fibonacci level of support at around 2150. But if we see a break back below that level, once again, we could find some support closer towards 2.1k, but below that, the next Fibonacci level of support is sitting at around 2020. And in a more bearish scenario below that, we have the 50% retracement level at around 1910 to 1920, and below that, we have the most important area of support, the golden pocket, sitting in between around 1780, going up towards around 1810. And zooming further into the short term, looking at the 2-hour time frame, like I warned about all the way back up here, we do have a short-term bearish divergence now playing out. And at least for now, as of recording this video, of course, the price of ETH is currently bouncing around between support and resistance, with this short-term support at around 2150 once again, and this short-term level of resistance right now is sitting at around 2230 to 2240. But if we see a confirmed breakout back above 2240, then in that case, the next resistance I'll be watching is sitting at around 2270 based on previous resistance. And above that, we also have some more resistance at around 2310 based on previous support and resistance. But at least in the immediate short term, as in over the next 1 to 2 days or so, we could simply just bounce around sideways, looking relatively neutral here, because once again, we have run into a bit of support now, stopping the price to the downside, at least in the short term. Also, the RSI on small time frames has reached oversold, but we still have those short-term bearish forces playing out, like these bearish divergences, once again, pushing the price to the downside, which could ultimately result in a bit of choppy sideways price action, potentially over the next 1 to 2 days. But believe it or not, you can make a lot of money very easily in choppy sideways price action just like this. And if you want to know how to do that, then check out the video in the bottom left of your screen right now, because that video right there shows you how you can easily profit from choppy sideways price action, and the video in the top left shows you how you can easily profit if the price is bullish or bearish. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.